It's time for the big three stocks, three charts, three trades. Ben Lichtenstein is here to take us through the charts, and here to take us through the trades is Jessica Inskip, Director of Education and Product at Options Play and co-host and founder of the Market Maker podcast. So great to see you both. So Jessica, let's start with you and your first trade, which is Crowdstrike. Shares up about 1% today, up almost 80% year to date. What are you doing with Crowdstrike?
Yeah, definitely looking to take a bullish position on CrowdStrike as we're trying to navigate just the rising geopolitical issues, tensions, risk. They certainly stand out. They are a longer term play from a growth perspective, which certainly speaks to their very high valuations. They're trading at 15.8 times next year's earnings for the next forward year 12 months, but that has 45% earnings per share growth potential for the next 12 months. So for this trade, I'm looking to take a bullish stance utilizing a bull call spread. So I am going to be buying the 180s, selling the 215s. That's going to cost me in total about $1,126. However, max reward of about $2,400. And I want to make sure that when I'm taking this bullish stance and I'm utilizing options, I want to be long Vega, which means capitalize also on increased implied volatility, which we certainly have seen and will see as we get more deep into earnings season.
All right, so Ben, Jessica's taking a bullish stance on Crowdstrike. Chart, from what I can see, looks like almost a straight line up. What do you see?
It has been well bid, that's for sure, Caroline. I think price activity is a pretty good reflection of what Jessica was just talking to. In terms of the fundamentals, taking a look here at the chart, you can see high conviction after a breakout, and it does appear as if we're starting to consolidate at this higher level. So again, you have that sideways price activity where you don't have a lot of conviction, mostly overlapping, rotational, but you can also see the separation here between this lower phase of value that forms this horizontal phase and this newer area that appears to be forming at a higher level. And that vertical separation here is a high conviction trade to the upside. And as I take a look, I went ahead and identified a couple of areas of balance. Again, it's just how your eyes should look at it in terms of taking a step back from the chart and kind of distancing yourself and being able to establish these two separate areas or phases, again, of development. It helps determine trend in this instance. Again, a limited amount of information here, seeing two areas that areas of value that look like they're moving higher. But once you take a step back, you're going to see that that pattern's playing out over a longer time frame as well. So you really start to solidify that working assumption that we're forming value at higher and higher levels. The stock continues to be and has been and remains bid. As I take a look, we're currently appears to be balancing a new area balance, horizontal, overlapping, random, rotational type price activity at this 185 level. But as long as we hold up above 166 right now, very much in a bullish stance and supportive of that bullish narrative, again, as we look for areas of value to form at higher levels. Taking a look at the reversal that we've seen here, because this move that we just looked at here is part of what really invalidated the working assumption that we were forming value at lower levels. This is a daily candle chart here, and we're going all the way back to October of 2021 and taking a look where areas of value had been forming to the downside. We bottomed out, if you remember, last fall, last winter, and then basically off to the races to the upside since. Remember, on the way up, we were talking about referencing the prior area lower as we're forming value at higher and higher levels. But in this instance, again, we were referencing this area, 185, right? So the recent move that we just talked about, hanging out at 187, that's not what the bears wanted to see. And we're now starting to bottom out, and it does look like we're establishing a bit of a pattern to the upside here.
All right, Jessica, before we move on to your next trade, I just wanted to ask, follow up on Crowdstrike. I was taking a look, the median price target on Wall Street, 195. Obviously, that's not necessarily a trade price. That's a longer term price target. But how do you go about looking at some of these companies like a Crowdstrike, which is already up so impressively? It's only it's very close to its 52-week highs, only about 1.5%, and decide, okay, this is something that I want to be bullish on given how far it's run?
Yeah, it plays into my overall investment thesis whenever I'm placing a trade, even or from the investing perspective. And a lot of that has to do with the AI revolution and how something will translate into that and help with some of the broader macro headwinds. So looking at Crowdstrike, for example, because of the geopolitical issues, that's one piece of it. But in addition to that, as we have these hearings on AI, those closed doors ones that we've been seeing, this is a solution and cybersecurity that's going to start becoming a bigger issue. So that high valuation of that price to earnings, it's really where I believe that the E in the equation isn't properly valuated. And then we'll see an increase in implied volatility, which translates over to why you want to go long an option, not short, because it can also increase in value, even if the stock stays the same, if that implied volatility spikes up. So that's the choice of the trade, but also why choosing CrowdStrike altogether. There's more opportunity for revenue.
All right, I appreciate the thought process behind it. So let's move on to your next trade, which is Amazon, also having a pretty impressive year. Not quite CrowdStrike levels, but up, call it almost 60% year to date, up another 1.7% today. Tell us about your trade for Amazon.
Yeah, so this first piqued my interest really with artificial intelligence. They have their AWS offering, but also have some large language models that they are producing and working with. And that access to data certainly makes it an interesting perspective from an AI perspective. Now, their logistics, they've also been doing some regionalized logistics, which has helped with their Prime delivery. And they've have cross-product penetration as far as Prime Video over to Prime on the shopping side, on the e-commerce side. Now, thinking about what we hear with Target and Walmart and how there's this big theft issue, that isn't really prevalent with Amazon because of the way that their storefronts are. It's largely e-commerce. So they're not susceptible, certainly as some, as those other big players. And their Prime days have been doing really, really well. So I think it's interesting, and I believe that will translate positively over into earnings. However, the trade that I'm setting up is more of a long-term play because of volatility that is happening around these type of securities. I'm looking to sell a December 1st 131 put. That's collecting a premium. About earlier today, the midpoint was 620. And that allows me to, one, I achieve max gain if this is above my strike price. So I sold an at the money one. So as long as Amazon stays where it is or moves slightly higher. But if the trade were to move adversely, I'd still keep that $6.20 per share, which allows me to essentially purchase Amazon at a discount and add it to my longer term portfolio.
Okay, Ben, what do you see in the chart for Amazon?
Caroline, this one's telling a little bit of a different story than what we just looked at in terms of crowd. We've got a trend lower here on the 30-minute candle chart. We've got migration of value to the downside, and this is playing out over a couple different time frames. Let's begin first and foremost with the 30-minute candle. And as I just identify these areas of consolidation that have formed at lower and lower levels, you're going to see exactly what I'm talking about in terms of some of the price activity we're seeing here. Taking a look at area 140, 138, and currently balancing around 129. So you've got this upper extreme here around 134. Below 129 opens up a door for a retest to 123, and I'm giving the benefit of the doubt to the bears in this instance because of the fact that, well, here you can see that we had been trending higher in a very well-defined staircase type pattern, but look what happened here as we were balancing around 138, talking about into the middle of August, beginning of September. The bulls wanted to see a breakout. We got that to the upside, 146. They wanted to see follow through, a new area of value form at a higher level. We didn't get that. Not only didn't we get that, but we've rolled over back down below 131. I think that was taking out a key area that we established on the way up. So at the very least, we've lost that momentum to the upside. Could be in a wider range at this area here, but until we break out above 146, that bull trend, that working assumption that we had been establishing areas of value, and in a bull trend has been invalidated. Taking a look here, I wanted to show you what's going on. Speaking of, you can see how we've weakened a bit here on this longer term. That recent top we just talked about, again, that 146 level coincided with the highs that we saw back in, June, July of last year. And again, also held that key area 150 in terms of this trend that we've seen lower here in the weekly. So I see a bit of a bearish pattern playing out here.
All right. And Jessica, you mentioned Amazon doesn't have to deal with theft, but CVS Health certainly does. Talk to us about your final trade, CVS.
They certainly do. So this one, I pulled a screen with some very, very specific criteria. And this actually piqued my interest in addition to with a news headline that they released after the market close on Friday. So they did an update to their Medicare Advantage Part D star ratings, which is just some quality bonus payments that they can get. And that would help offset any losses that they have had. So that certainly plays well when I pulled the screen just to validate that thought process from seeing that headline. And additionally, Rite Aid filed for bankruptcy, which would be good for CVS gathering some more market share. But as far as the fundamentals are concerned, they have an average price target of about 90.16. That is 26% upside from here. Their forward PE for 12 months is 8.3 times next year's earnings. So that is very cheap from a valuation perspective. So it looks to me, even from a technical perspective, and I'm looking at this on a weekly chart, and I'm sorry I didn't send that over, Ben, but it looks to me that it's forming a base from the analyst price targets and evaluation perspective. It has a lot of room for upside, and the news headlines are certainly helping with that. That could translate positively into earnings.
All right, so Ben, CVS up almost 2% today, down more than 20% year to date. Take us through the technicals for CVS.
Yeah, you know, as I looked at CVS, I think it's kind of saw it sort of as a mix of the two names that we just broke down. Taking a look first and foremost, the recent momentum has been to the upside, kind of balancing around 71 and holding above that right now. So I think that's somewhat bullish. As you can see, breakout above 66 from a few weeks ago and how we've managed to accept this new upper level. What concerns me is we recently broke above and tried to break out above 75, almost identical in terms of what we just looked at a minute ago with that failed attempt to break out and how we had come back off. But taking a look here, you can see a bit of a bearish pattern that's been playing out here with this longer term going back to February, and we're looking at 4-hour candle charts here. We were up around 90, 91. You can see most of the conviction occurred to the downside before we started to balance out and gone sideways. We've got a pretty well-defined upper extremes here now established, and this is right around that, what was at the $78 level. So again, as long as we hold above 71, potential to retest that level, but still random within this range and limited in terms of conviction. I did take a look at the weekly chart, as Jessica mentioned, that bottoming pattern form. And interestingly enough, that would coincide with a key area over here that we established, this range that we were in, we'll call it 2019 into 2020 before the big move up we saw after the pandemic, all the way again up to 111. But you can also see how we've really lost that momentum to the upside, and so just maybe back into this comfortable zone. I wanted to show you where we were relative to the 50, the 200-day moving average, because I think this sort of feeds into a bit more of a bearish pattern here as well. Holding below the 200, that longer dated. RSI is kind of limited, hasn't really shown a lot of enthusiasm to the upside. So again, I guess there's two different ways to approach this, maybe something for both sides depending on what you're looking for in this one.
All right, we'll leave it there. Ben Lichtenstein, Jessica Inskip of Options Play, thank you both so much for being here.